I'm Nidhi Sinha, editor Outlook Money, and I have with me today Mr. Tapan Singhel, MD and CEO of Bajaj Allianz General Insurance, who will throw some light on the key aspects of auto insurance to help you make the right decisions. Welcome, Mr. Singhel, to this show. And we are talking about auto insurance, which I think almost all individuals have, because as we all know, nobody can drive out a car without buying insurance. But what happens is most people end up buying that mandatory third party cover, as we call it, because that is mandatory by law. But do you think that's enough to buy when it comes to auto insurance?
It's a very good question. So let me debunk some myth on this. First and foremost, it's a fact that it is mandatory by law to have a motor insurance before you get on the public road. You can't put your car on the public road without. That's why you have this police looking at insurance and cutting challans. No? That is the reason behind it. Second is that even though it's mandatory, all people have insurance. That is not so. You'll be surprised to know that more than 46% vehicles on the road have no insurance cover. 46 to 47%. Yeah, that's unbelievable. More than like it's like half of people owning a vehicle don't have an insurance cover. Now, okay, that's fine. One is by law is required, and then somebody may think, if the police catches me, I'll pay some challan. But what people don't realize is that on a two-wheeler, we have claims close to 15 crore, 20 crores. No, can you believe it? On a two-wheeler, the vehicle cost is, let's say, about 70,000 rupees. How can a claim be for 15 crore rupees? It looks ridiculous.
Yeah.
You know? But in India, if you hit someone and the person has an injury or has a fatal accident, you are liable to pay compensation to the person who's got hit by your vehicle. Even if you're not driving, somebody else is driving, but the vehicle is yours, you're liable to pay compensation.
Right.
The compensation is as per the award by the court, and it is unlimited in terms of the amount of quantum of liability, and it can be filed at any point of time. Now, in the two-wheeler claim, which I'm talking, which is a 15 crore claim, the person who met an accident was a techie. So on his salary, they put multiplier of number of years left and dependents, and then they calculate the amount, and that can run to any amount of money. So an accident by a two-wheeler can also lead you to be liable for 15-20 crores.
Wow.
Now imagine if you don't have a cover, then you have to pay that money. And that is why it is mandatory by law to have a cover, because otherwise the compensation which goes to a person who has an accident may become insignificant. Because as an individual, if you do not have 15 crore rupees to pay, even if you sell your house and you become completely insolvent, and you're still able to give it a couple of crores, you have become insolvent, and the person who has lost his life, his family has not got adequate compensation. It's a very, very bad situation to be in.
Right.
So for all the viewers, one, it is mandatory by law. Second, please have a cover. You do not know what is the liability that can come on you. It doesn't matter what vehicle you have. So that's the first point. Now, second point is the third party is what you said, or the TP liability as we call it, is what is mandatory by law to have. So that is the basic cover which you have to have.
Yeah.
On top of it, now if I look at the own damage as it is called, or the comprehensive cover it is called, and along with that, if you have a roadside assistance cover which is there, like if I have to take a cover, I'd actually take a comprehensive cover, and I have a roadside assistance cover along with a comprehensive cover. Why do I have that? If let's say I'm driving on the road, do we realize that if your tire has a puncture, you actually don't have to get down to change it. You can call up the insurance company if you have taken a roadside assistance cover, and they'll send somebody to change your tire. If your vehicle runs out of fuel, then you actually don't have to worry. You just have to call the insurance company. They can provide you emergency fuel. They do so many activities other than just looking for payment of an accident which would happen. So insurance, vehicle insurance, that way is very interesting. You should have a good cover. And I've seen in Bangalore, Chennai floods, a lot of vehicles got damaged, and they all parked and very safe with the amount of water which happened. So suddenly you bought a car which is an expensive car, and you like overnight because of floods and no fault of yours, it goes for total loss.
Yeah.
and you lose the entire amount of money, and you may, if you have taken a loan, then that again becomes a big problem. So be well covered. As I said, not expensive compared to the value of the car. It is insignificant, the insurance you pay. Take a comprehensive cover and look for add-ons to the cover. Look for roadside assistance, look for engine protector, look for these kind of add-ons to make it very, very comprehensive for you.
Yeah. So you are talking about add-ons, and the general insurance industry has seen a lot of innovations lately. So what are the riders that you really recommend to our viewers apart from roadside assistance?
So roadside assistance is a given. Don't even think of not having a vehicle without, because in times of these small irritants which is there, you actually have somebody to help you out. The next thing is, if I look at what is happening, the engine protector cover, as I mentioned, one of the ways, and a lot of floods are happening now, cities are getting choked. One loss which I see which keeps on happening is in a flooded area, when you drive a car, most of these modern cars with some water coming in, they stop. Now our natural tendency is, if the vehicle stops, we try to start again, and we crank it a couple of times, and then we start pushing it together, and that leads to engine damage. Technically, if you are moving into water, if your car stops, just call for assistance, get down, and let the vehicle be towed. Don't try to start it again, because when you try to start it again, that's the time when the engine gets damaged. Now, as per the insurance policy, that is a consequential loss, because the vehicle has stopped, and then consequential the loss happens, and that actually gets into a zone in which the claim does not get paid, which leads to a dispute. But you have engine protector covers, which actually takes care of this part of the cover as an add-on which should be there. That is second add-on which I feel is very, very precious. So normally, because there's a human tendency, and it is not that we are driving the car every time. Maybe a friend is driving, somebody else is driving, and the human tendency is to crank the car, and then the loss I've seen happen. So have an engine protector cover. The third cover, which if your car is new, makes sense, is that the depreciation cover. So if you look at the plastic parts, they have 50% depreciation. So take a cover for that. Where in a new car, the bumpers and all are very expensive. So a 50% depreciation cover should means a lot of money goes down if you have. But look at the cost of the add-on cover to the age of the vehicle to see is it worth it or not worth it. But for new cars and new vehicles, at least for the first couple of years, I strongly recommend have a depreciation coverage should be there. I can go on and on. There are a lot of, but these 3-4 are very, very critical to have.
Absolutely must-haves that people should have.
Yes,
so another thing when it comes to insurance in general, and that's true for auto insurance also, is there are certain jargons that people do not understand, and once they don't understand, then they don't make decisions in sync with those. So one of that is insured declared value, which is called IDV. And the whole concept of no claim bonus, which is also very attractive for them. So if you could explain these two terms to our viewers.
Yes, actually, again, interesting. So how do you look at the value of a vehicle? When you buy a new car, the value is very clear. The vehicle you purchase, that's the value of the car, and that's what you put as sum insured. But as it ages, what is the right value of the car is where the problem starts coming in. So the IDV is a set process of determining the value of the car, and I think today from the council side, the industry body, the IDVs for cars more or less has a predetermined formula in which you calculate and put the IDV. So, but that is the value of the car, is the total sum insured. If the car gets stolen, that is the amount which shall be paid. If a car goes for a total loss, that is the amount which shall get paid. So, but look at IDV. Don't try to lower the IDV from what is being suggested to you. So it's good to be covered. The differential in price will not be much. Sometimes when you ask for a lower premium, and if the agent is not very fair, he or she may reduce your IDV and your premium may get lower. But just have a check on that. So that's a very good question to see. Look at the IDV, what is the value of the car being put, and the formula that has been derived, ask for that so that you are aware about it. The other question that you had asked about was on the IDV and NCB,
NCB, yeah.
Now, NCB, bonus malus, again, the history behind, let's say, automobile insurance, let me give that to you so you get the context of all these add-ons and why is it not part of the policy. See, in India, the pricing got freed in the year 2007. Before that, it was under tariff. It was controlled by the tariff, and but the product wording did not get free. So the motor policy, the original motor policy, is the same for all companies, and actually it has been there for now many years. Like I don't even remember when did it start. Now in that you have like the depreciation of plastic 50%, and those were the time of when the car was all metal, when the bumper was metal. No, there's nothing called plastic, and glass had zero depreciation. But today's time most of the car is fiber. No, it's mostly plastic. That is why you have this add-on which I mentioned last time of the depreciation. Then there's the clause which says there's NCB. That's no claim bonus. We don't claim, you get a rebate in premium. If you claim, then there's a malus, which means you get a loading on the premium. That again comes from those earlier times of tariff, but still continues because the wording is the same. And that's why insurance companies have said they'll add on to make the policy more relevant of today's time, and that's why you see so many add-ons now. With the freeing of wording, I think this will become part of the inherent policy which should be there. So now let's say if I have 4 years of no claim bonus or 5 years of no claim bonus, and my no claim bonus can go up to 50%. No? So let's say I have a 50% reduction in premium. If I have a small claim of let's say 2,500 rupees or 5,000 rupees, and I claim that money, then my entire NCB, that 50% which I was getting as rebate on my premium disappears, and then I may actually get a malus also. So when you have a small claim, always check that if you have a no claim period and you're actually getting more benefit in terms of premium that you're saving, would you want to take the small claim, or would you be self-insured for that? No, because the premium saving is high. So the NCP, the way it operates is it keeps on accumulating, but if you have one claim, the NCP starts moving down on that basis. So it's like a sliding right? If you have more claims, then it starts moving to the malus side. That's inbuilt in the motor policy. So if you have a strong policy which has a huge amount of NCP, please see that when you have a small claim, is it worth to take that or not? That is my only advice on this part.
Okay, so we are talking about claim settlement with through NCB, and a lot of people sometimes they kind of complain that okay, auto insurance claims come, but maybe they take a bit of more time than usual. And this is something that usually when you are taking out your own car, you immediately need that car within a week because of your daily needs, etc. So are there, again I was talking about innovations, there have been many innovations in general insurance, including and the most in auto insurance. So what is the way forward on this? How can this friction kind of get reduced through technology?
Okay. Now I think first and foremost from an insurance industry perspective, the claims get settled, and we were the first at Allianz to innovate this about 22 years back. We said at cashless was bought in, and we said at the garage when you go, you don't have to pay, the insurance company will pay to the garage directly. So garage repair your car, and then your car can move out. So in a way, the insurance industry has already agreed to pay the money. So the settlement or the time to your garage is not because of the insurance industry as such. And when we study the reason for delay, most of it is because of spare parts availability or the garage overload which happens, and your vehicle gets stuck, and since you have to take it to the garage for repair, and now the vehicle is stuck if the garage is overloaded. So then we saw, okay, this is a problem. We came out with a solution of providing cashless. You go to the garage and don't pay for it, and insurance company pay to the garage directly. You just pay for the depreciation or the consumables, and then you just take your car out. It was a very fantastic thing. But the problem is that the car is stuck, like you said. And then we studied that if you look at about 70 to 80% claims, is actually not very complicated claim. They are a claim of a bumper loss or a windscreen loss or a door getting damaged from the side. It's not like a very major accident. And if you actually look at, so we thought if the majority of the claim is not a major accident, then let's give some flexibility to the client or the insured. So we came out again with a solution, and that was again one of the first. It was the first in the world, if I remember, when we came out with a solution. Is that you get out of the car, click pictures on the spot, upload it, and we transfer money to your account within 15-20 minutes. Now you have the money with you. So now you decide when to go to get it repaired. So you don't have to send the car immediately. So you're not stuck. So let's say you decide the weekend I'll go and get it repaired. We already got the claim amount, right? And it's not some major damage that your car is not able to move. And now with that amount, you go the weekend when your car is more free and pick up a garage which says that they can deliver immediately, or pick up the one which has the spare parts, because now you have the money and you have the negotiating power as an individual, and you do that. So now I think if you have an accident, and in most cases if it's not an engine loss, you can actually upload pictures and get claims immediately, and the money is with you. Then you go at your leisure time and get your vehicle repaired. I think that, so we keep on innovating to see how do we solve the issues that come.
Yeah. So this has been definitely happening for a couple of years, if not
Yes.
more. What other innovations can we expect in the auto insurance domain?
So now the interesting one which is coming is EV. So if you look at this again, EV has charging point issues. You have to have a charging point. Now that can get damaged.
Yeah.
So we're trying to see how do we do that, or we're trying to see that if your battery runs out of charge, how do we take care of that in terms of assistance to be provided. You're also seeing that if battery gets stolen, how do we immediately try and replace that. So we already have a cover for all this, right, from your EV stations to to most of the electric vehicle, whatever the new kind of risks which have come in and the issues which have come in is a solution that we have provided for. So innovations keeps on happening with time as the customer faces new issues. And my personal feeling is that the day is not far that this automobile will move to drone taxis. Though it looks a bit far-fetched right now, but if you look at it, it's already there in Dubai. You already have drone taxis. I already read a newspaper article in which there's this airline which is saying that they're going to run from Connaught Place to Gurgaon flight service, which would be vertical takeoff. So if the licenses get allowed for private players to have it, then the day is not far when you prefer to have a drone drop you from one end to other than to take the road.
Yeah.
Then we shall innovate to cover those, the risk which is there. So I think it is like that. It's a constant evolution which is happening. Currently on the EV, a lot of innovations are happening to provide solutions to consumers.
So another thing that we've been talking about a lot of things, but another change that we see in society, not just innovations, but in the way people conduct themselves. So a lot of them are now also moving to public transport, like in bigger cities like Delhi and Mumbai. Metros have become more capable. They have better connectivity, etc. But people have their own vehicles as well, which they kind of maybe use on the weekend or for a holiday trip. So for that segment, what are the products that you would recommend? Would you recommend a comprehensive policy for that segment as well?
No, it's actually interesting. Again, we were among the first to bring this product of pay as you drive, which means that if let's say you feel that you will only drive 100 kilometers in a year, then just buy a cover only for 100 kilometers. You can actually define the number of kilometers. But if it falls short, you can take a top of cover. So that can be done.
Yeah.
Second, now we are coming into with a mobility cover to the point that you said. That let's say from your home you drive to the metro station. There you take the metro rail. Then you get down, you take Ola or Uber. You go to office, and then you take an auto rickshaw to go to some other crowded place which is faster and easier. And then so you are actually taking different vehicles, and you are taking different modes of transport for your movement. Now very few people would actually have the same their own vehicle for the entire thing.
Yeah.
So to the point I was mentioning earlier, so an insurance company now we should be giving you a mobility cover, which means that irrespective of the vehicle that you are in and the risks that would be there, we give you comprehensive cover as an individual. So that also is available, which is there. So I think as the risks changes, the insurance industry keeps on coming out with innovations to do so. But to answer your question, I think immediately what a customer who does not drive much can do is log into, like if they come to our site of Allianz, they'll be able to get this cover of among the kilometers they drive, they can just buy that much.
Okay. So I think the regulator is also moving forward on these lines, because this pay as you drive has also come as part of the circular.
Yes.
So thank you so much, Mr. Singhel, and this was a really informative conversation for our viewers, I'm sure, because we covered almost all aspects, and I'm sure you'll benefit from this conversation. Thank you.
Thank you. It was an honor being here. Thank you very much.